have our next question. Before I go to it, I'm going to ask you to think about something that I will come back to in a second, David, if it's all right. I'd love to hear one classic key mistake that one of you made that you'd like to share with this audience today, because we learn from mistakes as much as we learn from benefit. Have a think about it, but let's go to this question first.
Thank you. When you grow up the exponential revenue growth, there are a couple of things you need to compromise, like a top line growth or bottom line protection. I'm wondering that along with the revenue double, triple growth that you guys made, how much important the gross margin nowadays, to accelerate the more gross revenue, you're willing to sacrifice the kind of gross margin. We are at 35 million revenue, 72% gross margin. Board loves our gross margin in the IT industry. We love it too, but there is some temptation that we think this kind of compromisation can accelerate the growth, but this is very sexy the point of a company, so we hard to decide.
Can I try that for a second? In the math of studying all the companies across all the industries, gross margin was an independent variable. What was in common was your EBITDA was 10 to 20%. The higher your gross margin, the more you got to spend in sales and marketing and R&D to accelerate your growth. But go ahead, guys.
So I have a big religion on this one. I believe gross margin is the singular indicator, of how competitive you are and how much your customer value your service, right? So you can always give away gross margin, but I would like to force every 0.1% of that gross margin out to prove that you really competitively are doing okay, and your customer really love you. You're unique. Your offering is unique. And then I think as a CEO, your objective is you have a knob to say, I let some of this gross margin fall into the bottom line, or I reinvest all the gross margin into distribution expansion or next generation R&D. So I am a gross margin freak. So I love gross margin.
I think this is one about balance. You can't have a general answer that applies to all businesses here. If you have a distribution company down here, you don't have 70% gross margins. In my business, there are industry standards, and typically a well-managed company in my industry might have a 14% gross margin, and I intentionally spend between 200 and 250 basis points of that in investing in growth. I have a goal. Our firm has a goal that we want to grow 20% a year compounded. And that's a controlled growth rate. We don't go crazy. We don't put the company at risk. But the fact is, if you don't have growth, you don't have the excitement, the enthusiasm, you don't have the opportunity for your employees, you really don't create the kind of organization that satisfies shareholders, which protects you and your management team long term. Because when the venture capitalists get mad, they get mad because they don't think they're earning the right return on their investment, and which is a separate issue. But the fact is, I really don't think you want to generalize too much. Walmart's made a lot of money by managing it down and increasing sales and gaining more market share. So, I really think there are the trade-offs. You have to weigh them and make conscious decisions about how to do it.
Mark?
I'm right here. I want to go back to the panel. I don't mind who. Share a mistake.
I'll give you one right now if you want one.
Well, Joe.
I'd be happy to. The biggest mistakes you make in business, I think, are people mistakes. And I remember one situation where we were recruiting an outside executive. This goes back about 15 years. And I spent a lot of time interviewing this fella, and other people did too. And I thought I had the right person here. And when we hire senior people, I always take the person and his spouse or her spouse out to dinner with my wife. My wife's name is Dorothy, and we went through this with this couple, and we're driving home from dinner, and she gives me one of these. She said, "Joe, I think something's wrong here." So you know what I did? I hired him anyway. And she was dead right.
Listen, I'm on that same thing. If I had to think of one mistake, we've got a saying around the company. It is you hire slow and you fire fast. And we've got a 12-month cliff on all of our offerings. And I will tell you, I feel achy about one senior executive that we brought into the company. We gave him a significant equity piece, and we allowed him to get past his cliff. And you want to try and build a guy, you want to try and work a guy, but I'll tell you what, when it comes time to pay out on that money, I will feel nobody will be happier about the money that we pay out except to one guy. And I do begrudge one guy's money that he'll take out of this company for the zero value add that he provided.
It's human nature to want to
Are you
help
emotional
people do
here?
well.
Yeah, this one bugs me.
It's
It's not even fresh, but it still feels it, you know?
We feel your pain.
Thank you
It's
very
human
much.
nature for us as executives to want people to succeed and want them to do well. But you're right. When you realize you made a mistake, you got to cut the cord and do
I know
something about it.
Tom's got one before we go. Here, go ahead.
Yeah, I'm going to give you one that relates to these times, because when we went public in '83, we did another small offering in '85, and we built our firm basically on retained earnings. So if you look at what we've done, it's almost all organic growth. And because the opportunity, the demographics in the United States for the financial services business are enormous. I mean, they are enormous. So the fact is that you could do that internally. Well, I got to the point about 3 years ago where we were sitting on $400 million of what I will call underutilized capital, essentially being invested overnight at overnight rates. And I said, my objective is to earn higher rates of return on our capital.
Cash.
Cash.
All cash.
So I'm going to start a bank, and I'm going to build this bank, and I'm going to start doing some proprietary investment in our merchant bank. And I did a terrific job. And I invested $350 million in these businesses, in addition to using the retained earnings that we generated at the same time to grow existing businesses. And then we ran into this financial wall you have right now. And for the first time in our history since 73, 74, I don't feel that I've got this big buffer that I'm much more comfortable with. So I overdid it. Imagine what customers do when they see a down market like this. They sell stocks, they sell other securities, and they put their money in cash. So overnight, virtually overnight, in 2 months, we had $1.4 billion of new deposits in our $8 billion bank. So, which is now $10 billion, by the way. I mean, because of these deposits. That means you need more capital to put into the bank. So I had to stop taking new accounts.
Now, in closing, in the interest of time, we want to pump you up for growth. My closing vote for you is, can this group grow in up and down markets by being centered and balanced on the 7 habits that you have experienced to date and in the past? What do you think?
Sure hope so, because I feel like I wasn't in their shoes. I think that there are a lot of guys that are a lot further along than I am, and we sure have every expectation, every hope, and we're going to keep busting tail to make sure that we do not slow growth just because of outside macroeconomic factors. So, yeah, we are not slowing.
I'm looking for my next kind of headphone.
The second, what I would tell you is the great thing about problems is there's always the half-empty glass part of this. You create terrific opportunities. And so at the same time you're spending a lot of time trying to keep your cost in line in your base business and cutting down on capital expenditures, you're looking at the same time as what are the opportunities? Where can I hire high-quality people that can come into the company? Where can I pick off a new opportunity that I couldn't do in more normal times? So I think you got to keep your eyes open here too, and I assure you, you can grow, or if you don't grow during this year, you are going to grow big longer term by investing in the future and not thinking about next quarter or this year.
In the last 30 seconds, Dom?
So I think this is the time for us to even put more thought on that thoughtful speed and get fit. I think I resonate a point that Tom made. This is the time for you to really get your low performers upgraded, because there are a lot of talents in the market. And if you take that opportunity, you come out stronger.
I concur with all they've said. I want to add to it, now is the time to get even closer to your customer than you are today.
Absolutely.
We wish you all the best on your exponential growth journey. Thank you very much.
Thank you. Great. Thanks to the panel. Thanks to David Thomson as well.